This is a wide view of Florida's coastal real estate. Properties here represent a massive financial investment, and keeping them updated means navigating a very expensive, highly regulated construction market. We've all heard the standard warnings about trying to cut costs by hiring unlicensed contractors. The usual fears are shoddy craftsmanship, half-finished drywall, or facing state criminal charges. Because of that framing, homeowners often do the math and rationalize the risk. If a kitchen remodel estimate comes in 30% below the competition, it's easy to assume the discount is worth it, as long as the tile looks straight. The reality of Florida law is much colder. The moment you sign an agreement with an operator who lacks a valid license, the state's entire consumer protection infrastructure simply shuts off. This flowchart tracks the immediate enforcement mechanism. Under Florida Statute 455.228, the DBPR can actively investigate you for aiding an unlicensed operator. They can refer the matter to circuit court and hit you with a civil penalty of up to $5,000 per offense. That upfront fine is just a warning shot from the state. The deeper danger is an invisible, systemic transfer of catastrophic liability away from the contractor and directly onto your shoulders. To understand exactly how you get trapped, we need to examine Chapter 489 of the Florida Statutes. This is the legal framework that dictates construction contracting and consumer defense across the state. Section 489.128 dictates a very specific penalty for unlicensed workers. Any contract you sign with them is legally unenforceable by the contractor. They lose the right to sue you for unpaid work or file a construction lien against your house. On paper, this looks like a massive advantage for you. Because your side of the contract stays intact, many homeowners believe this statute guarantees their right to sue the contractor if the work goes south. But a lawsuit only works if there is something to collect. When you take an unlicensed operator to court and win, you find that they do not hold general liability insurance, they do not maintain a bond, and their business assets are completely empty. You win a judgment, but there is no money to recover. Normally, Florida maintains a dedicated safety net for this exact scenario, the Florida Homeowners Construction Recovery Fund, which can pay out up to $100,000 to cover homeowner losses from contractor misconduct. Section 489.141 outlines the rules for accessing that money, and it includes a fatal catch. The fund explicitly blocks your claim if the contractor you hired did not hold a valid license at the exact moment you signed the contract. Chapter 489 creates a complete legal stalemate. The state allows you to go on the offensive in court while entirely isolating you from any actual financial recovery. Because unlicensed operators cannot legally pull a building permit, they rely on a specific workaround to get the project started. They will suggest that you pull the permit yourself using the owner-builder exemption found in Florida Statute 489.1037. The moment you pull that permit, your legal status changes. You are redesignated as the general contractor of record for the project. The person you hired is legally downgraded to your unlicensed laborer. With that new title comes immediate exposure. You are now personally responsible for ensuring every piece of the project meets local building codes, and you are entirely liable for any damage the work causes to your property or your neighbors. The exposure extends to the crew itself. If an uninsured laborer falls off a ladder or drives a nail through their hand on your property, you have no workers' compensation umbrella. Your homeowner's policy will deny the claim, leaving you personally liable for their medical bills. The operators who use this trap follow predictable patterns. And they demand cash-only payments to avoid a paper trail, refuse to write down formal scopes of work, and submit bids that are roughly 30 to 40% below the market rate. By signing that owner-builder permit, you take on the role of legal shock absorber for every risk the contractor walked away from. The financial cost of an unlicensed bill rarely shows up while the crew is on site. The damage usually stays hidden for 2 to 3 years, waiting for a stress test event to expose it. Look at the sheer scale of the structural damage in this photo. When a major hurricane hits, insurance carriers comb through property records. If they discover your previous roof replacement lacked a valid permit, they routinely void the new storm damage claim entirely. The real estate market provides another stress test. When you try to sell or refinance your home, appraisers and lenders cross-reference city records. Unpermitted additions or electrical work will halt a closing, forcing you into a retroactive legalization process. To legalize the work, you have to hire engineers, tear out drywall to expose the framing for inspectors, bring everything up to current code, and pay accumulated municipal fines. These cleanup costs routinely exceed the price of the original construction project. The initial 30% discount represents the unpaid overhead of insurance and permits, now deferred and multiplied for a future disaster. There is exactly one way to stop this liability cascade. You have to verify the contractor's credentials before a single document is signed or a single dollar changes hands. You can run a free live check against the state database by going to myfloridalicense.com. This checklist shows 5 non-negotiable details you must confirm. License status must be current and active. Type and class must match your project. The expiration date must be valid, and the name on the state database must perfectly match their contract and truck. In the state of Florida, consumer protections are tethered exclusively to the professional license. If that license is missing, the safety net is gone, and you stand entirely alone.